Welcome back to the channel, your home of macro cycle analysis on crypto, Bitcoin, stocks, and the real estate market. Today's video, we're looking at a specific signal that comes towards the end of bear markets. This is called the end of the bear market in Bitcoin once, twice, and potentially this could be the third time that we're seeing the signal play out. That's what we want to have a look at in today's video. So make sure you do stick around, watch the video through to the end, and hit that like and subscribe button. You want to see the value? I get it. I'll remind you again at the end of the video. On top of this signal here, we have two other major signals that end bear markets. We've covered these on the channel, but it's a good idea to go through these again as we get close to the end of this market. It's important to remember we're not trying to call the bottom of a market. We never try and call a bottom, never try and call a top. Remember what happened through the bear market and the previous bull markets as well, where influencers, any other talking heads online start to call for significant price targets to the upside, $100,000, to the downside, maybe it's $10,000. Sometimes these figures will just never happen. And that causes a lot of pain to the unsuspecting viewer or new person to investing. And so we're never trying to do this. Our goal in investing is to take a chunk of profits out of the middle. This is what the professionals talk about. They just talk about taking their profits, holding it in cash, and waiting for another opportunity. Cash is not trash, as we have first-handedly experienced through 2022. We often get those calls at the tops of the markets. Same sort of thing we get at the bottom. We're expecting lower prices. Everyone hold on to your cash. And it's usually the opposite. Of course, we don't know exactly when the bottom is. We look for signals to let us know that the markets are possibly in the process of flipping. So the first major signal we want to look at in today's video is using the swing indicator. You may have seen me use this on the channel before. You can get a look at it here, the TIA Gann swing indicator. This is always under development. We're continuing to improve it along the way, but right now it is based on our Gann analysis, our Gann rules, and it works remarkably well to get you into markets early on and get you out of markets nice and safe. This tool is what our members use, and it's basically the premise of our entire trading plan. You can see here that it helps you get into the market and stay with the market almost until the very end. And you can almost get right to the peaks, not trying to call the tops, but get close to those peaks on different time frames. But in this video, I want to make it nice and simple and just look at it on a macro time frame here and start to look at just some simple timing within this particular indicator. If you do want to get access to it, it's in the top of the video description. That second link there, TI Gann swing indicator. The price rise is coming soon. So if you want to check it out, click that link, go through to this page, learn more about it before the price rise. I talk about the swing indicator a lot, almost to the point of a shill, because it helps me in my trading so much. This is the premise of my trading and our members as well. But enough said about that. Let's have a look at how this thing works and how this is a bear market ending indicator. We've got the swing type here, 2 bars. How does this thing work? Well, these are the candles. This is on a weekly chart, the macro picture here. Remember, we want to understand the macro picture to give us some more macro turns, whether it's the bottom or the top. And in this case, we want to make it nice and simple. We're looking at these white bars, not our colored children's crayons here, the candles, the white bars, nice and simple, nice and clean on the chart. And all we want to note is how many times we've seen a turn on this chart. And the turns come from the tops exceeding the previous tops, and then they'll spin to the downside when the bottom of the bar exceeds the previous bottom. As you can see right now where the market is, we've exceeded the previous bottom, therefore the swing turns down. The second thing we have with this particular indicator is that it won't just swing on one move, so 1 week. So we're going even more macro. We're looking at a 2-week swing indicator here. So it needs to have 2 weeks to the upside and 2 weeks to the downside in order for the indicator to create a swing. And so this gives us less false signals. As you can see here in this particular run, one small false signal, which we can also cover with some clean set of filter rules as well. But for this video, we just want to count each of these swings to the upside, because this then lets us know about how much time we have left in the particular move to the downside. Each of these swings is basically the market in a macro sense going against the trend. You can see the trend was down here into November and that low into December, and then we had a counter swing move here to the upside. So basically a rally in the start of the bear market. To the downside, we had that drop again, a rally, another drop, another rally, and then a much bigger drop. And so we can see quite clearly and very, very quickly here, if we turn off the bars altogether, just the time to the downside on linear is getting less and less. And also the moves to the downside are becoming less and less. This was the last major move to the downside on the FTX news. And you can see in terms of price, how much smaller that was compared to something like May and June when we had the collapse of Luna and UST. So even though FTX may have affected more people, lost more money in the market as well, you can see the move on Bitcoin was actually less. And it shows it very, very simply, very, very quickly. So then you can action the signals quite efficiently and you're not caught up in a whole lot of analysis paralysis. This is really, really easy to use. All right, so the next thing we're looking at is how many times we had the swings to the downside. As we've counted out here, so far we have 1, 2, 3, 4, 5, and this is our 6th swing right now. In the previous cycles, what have we seen for Bitcoin? So we have the 2018 bear market. We're just going to throw it on log as well to give us a bit more data in here. We have one swing to the upside, a second swing to the upside, third, fourth, fifth, big capitulation, 6th swing to the upside, and then the bull market of 2019, basically just in time for that Bitcoin halving in 2020. So this basically called the end to the bear market. We did have some lower prices. It was higher than the capitulation lows, but we did see the market hold up at these levels for quite some time, barring the pandemic crash low, which was only there for 1, 2, 3, 4 weeks before it started to move back into that territory of $6,000 to $7,000. And then of course the rest is history from that point. We go on another bull market, nice swings to the upside, easy places to enter, put your stops underneath these levels, ride it to the top, put your stops underneath these levels, get stopped out, make a nice chunk of profits in the middle. Essentially, we're here to talk about the end of the bear market. So we've seen here already 1, 2, 3, 4, 5, 6 swings to the upside before the market broke out and went on a nice little bear market rally or start of a new bull market, whichever way you want to see this as a potential reaccumulation. Going back to the previous bull market and then subsequent bear market in 2014, 1 swing, 2 swings, 3 swings, 4 swings, 5, and then the breakout, quick dump, and the market started to move away from that point. On other charts, this particular low here did not exceed the previous low, so it just depends on which exchange you're looking at. But overall, we also saw 1, 2, 3, 4, 5, and on the 6th attempt, it broke the swing tops. And then the 7th here, we had the final breakout and consolidation before the move to the bull market began. So you could look back here and say 1, 2, 3, 4, 5, 6, and then on the 7th, you're basically out of this entire accumulation zone before we had the reaccumulation and move to the upside, whereby looking specifically at this indicator, could have entered at these tops, held stops underneath these levels because we do need to sell at the end of this. This is not dollar cost average and hold forever. You got the lows, move your stops up, move the stop up. The stop is essentially your safety net to exit the market. Move the stop up, move the stop up, and you can move the stop up to this level. Now, of course, we can get into more detail of how you could get closer to the top, but that's beyond the scope of this particular video here. What you could see is there is a nice, clean, easy chunk of profits to be made out of the middle of that market, and this will continue forward as well. So looking at our current move again, now that we've looked at the 2 previous cycles, approximately 5 to 7 swings to the upside before we get a nice move that breaks a lot of these particular tops. We're again 1, 2, 3, 4, 5, 6 swings to the upside. Now, it doesn't have to repeat exactly. Maybe we do see another couple of swings at these levels, But either way, this is getting very, very close to the end of this particular move in the market because of how many times the market has attempted to rally. And then to the downside, how much shorter the moves to the downside is getting as well. When the moves to the downside are shorter, that essentially means that there are less and less people selling. This is a telltale sign that we are getting far less people selling than what we had done at the beginning of the market. Of course, you can easily see that from the price and how far the move was to the downside. And that is really telling here because we had an extreme event of FTX collapsing, a major cryptocurrency exchange collapsing, and the market only went from 21,000 to 15,000. In the past, that was just another day or week on Bitcoin. And this was one of the most major events that ever occurred. And it didn't even collapse the market to those extreme targets of say 10,000 or 8,000 or $6,000. So now we just play the waiting game. And on top of that waiting game is the day count. So we've gone through the macro swing breaks. We're looking for a break of these particular macro swings to the upside, ideally around this level of $21,000, $22,000 or $25,000. And then for the day counts, we're getting very close again to what we've seen in previous cycles, something we have covered here on the channel many times. The first cycle here, 2014, we have 411 days. You can see that from the top to the bottom, 411 days from the peak to that low here. As I said, this low did not occur on all exchanges, so we use this low as the cycle low. The next cycle was in 2018, 363 days, basically almost exactly 1 year, top to bottom, 363 days. And at the moment, with the current low being middle of November, 376 days, as the peak was around early November. So this could still lead out into January, maybe for another bottom as well, and that would still be well within the timing of all previous cycles, which means that lines up very, very well with the previous cycles and of course the halvening event coming up in 2024. That's a look at the day count, and we've covered the macro swing breaks here. And the last thing is the bear market downtrend. That is basically connecting the tops of these entire moves before we get the breakout. Like we've seen in the past, connecting those tops, once that market does break out, it usually coincides with a number of other signals. The other signals obviously being the break of those swing tops. This was the breakout of the bear market downtrend. You see this is the move down. It also coincides with the timing of the low, looking at that particular day count as well. So we're getting very close to that move. This is the bear market downtrend on a logarithmic scale, and Bitcoin was getting slightly close to it. It dropped away again with the FTX scandal, and it's now attempting to get back to closer towards that logarithmic downtrend. However, on the linear scale, we did break out of it a couple of months ago. Now, to bring some color back into our life as we look at how the market tested the top side of that bear market downtrend, you can see that the ranges have gotten smaller again. So this is also a sign of a bottom pattern forming. Topping patterns are often seen with extreme volatility, so big, wide fluctuations. As this catches a lot of new investors out, they basically try to catch these bottoms and move to the upside, in the hopes of higher prices. And this is the smart money selling out. The downside is often seen as lower volatility, like we can see in the past, where a lot of people have left the market, and this is the time for accumulation. So we have a number of patterns all coming together here. Sure, the market could break lower, but the timing is starting to run out here for these potential moves to the downside. Along with these moves to the downside, we do need another extreme event, and it seems like the media is trying to push more extreme events at us in the likes of more FUD around Binance or Gemini and Genesis and Grayscale Trust. So if none of these news items can come to fruition probably within the next 1 to 2 months, then you could probably push those aside, saying that they may not happen, and we can look to start afresh for that next cycle. So they're still there at the moment, but the cycle is running out in terms of time for them to push any of these narratives and get something else to break. This is just part of the news cycle and the market sentiment. So the last 2 bear market cycles for BTC, the swings have called the end of the bear market. Once these swings have broken to the upside, that's the end of the bear market. However, the news is still going to be very, very negative. So don't let that put you off. Follow the chart, follow these swings and how they are forming in the market. Of course, we'll continue to update it here on the channel. But if you want to get your hands on the TIA Gann swing indicator before the price rises, Link is in the top of that video description. Check it out down there. Check out the tool, learn more about it so you can implement it in your own trade. And you can see how beautiful it works to the upside when these bull markets really do get going. Keeps people very, very safe in the markets. Check it out, link in the description. And for the traders among us, check out the links to Bybit and BitGet as they're still giving away $39,000 of sign-up bonuses. Use those links in the video description and follow the procedure in order to claim those bonuses. Thanks very much. Have a Merry Christmas. Like and subscribe if you found some value from it. And I'll see you back here extremely soon. Until then, peace out.